Well, let me first bring on board our technical expert for today, Sacchitanand Uttekar of Tradebulls Securities joining in this morning. Good morning, Sacchitanand. As usual, great to have you on the show. But given the kind of volatile setup that we've seen in the markets yesterday, after 4 days of losses, the Nifty did manage to end in the positive zone. But given the kind of volatility in the markets, what should one's F&O strategy be for tomorrow, for today rather, on the index? And where would you see crucial support levels emerge for the Nifty going forward?
Good morning, Nandita, and thank you for having me on the show. Clearly, if you look at the last 5 trading sessions, Nifty has shown a very sharp decline of almost 3%. But I think yesterday's session was very crucial. Yesterday, we saw some stability coming back into the markets, especially if you look at the 60 minutes data. When we look at the Nifty RSI, there are early signs of a positive divergence, which has been evident on the 60-minute scale. On the daily scale, we saw a doji kind of formation. Now, again, doji as a candlestick pattern indicates indecisiveness. But after a decline of almost 4 trading sessions, the occurrence of a doji is a promising sign that probably we may see some stability coming in the market soon, and there could be a reversal in sight. Now, if you look at the last 5 trading sessions as well, we saw a gap sequence which has been ongoing. The entire structure started with a breakaway gap at 20,100 when Nifty breached that very consistent higher top higher bottom sequence, and after that we saw a runaway gap somewhere close to around 19,900. Now that particular level was also a very key support. Now there's a good probability that we may see an exhaustion gap soon, and that's why we are of the opinion that the sell on rise strategy should be avoided, and from here on every declines could be an opportunity to get it back into the market. So from a trading perspective, for today's session, I think 19,540 would be a crucial support on the lower side. Until unless Nifty is holding above this particular support, I think that the decline could be an opportunity to accumulate some good longs. On the lower side, we don't see any further slippages below the 19,500 mark for this particular expiry. On the higher side, for today's session, 19,780 remains a very crucial resistance because the 20-day exponential moving average is also placed there. So in case if we see a rebound during the session, we may see some profit booking near to this particular zone of around 19,760, 780. So probably we may see Nifty oscillating within this range of 19,540 on the lower side and 19,750 on the higher side. When we look at Nifty Bank, again here it's a very similar structure, but relatively I think Nifty Bank looks better. From a trading perspective, 45,000 remains a very crucial hurdle until unless we don't see it for closing firm above this particular level. We may not see any fresh directional momentum play. But on the lower side, the support at 44,500 also looks promising. So I think the net strategy for the day is to accumulate Nifty and avoid the sell-on rise mode, which has been there for the last few trading sessions. So on a declines, we are of the opinion that the Nifty can be traded on the long side, keeping a stop loss somewhere close to around 19,540 on a closing basis.
Jafar Raza wants to know your thoughts on Tata Consumer for the long term. Yesterday it was among the top gainers on the Nifty 3% uptick or thereabouts. How would you advise investors to look at this stock for the long term now?
Well, Nandita, I think this is one of our top picks for today. In fact, yesterday we saw this particular stock, giving a very confident breakout above its 900 level. Now, this particular level is very important because from a weekly and monthly perspective, the stock was not managing to sustain above that 900 mark since September 2021. Now, this is the first time that we have seen a very firm breakout here and a sustained move. The pattern structure is very confident. It's a continuation flag formation. From a long-term perspective, we may see this particular stock, scaling towards 990 levels. But from a trading perspective, we have a target of around 930 that we are recommended, keeping a stop loss somewhere close to around 890. Even traders can accumulate this particular counter. The second stock on our radar has been Ultratech Cement. After a 5 straight days of decline, we have seen a doji kind of formation at a very important support level at around 8,200. So keeping a stop loss somewhere close to around 8,150, we may see a very strong reversal getting shaped up here. So we are expecting a swing target of around 8,450, and Ultratech Cement can also be accumulated on a decline, keeping a stop loss at around 8,150. And the final call would be a sell call on ICICI Lombard. Yesterday, we saw the stock slipping below its 20-day exponential moving average. There's a negative crossover on its short-term averages. The data is indicating that the stock may slide towards its 200-day exponential moving average, which is placed somewhere close to around 1265. So keeping that target in mind, the stop loss should be placed at around 1345, and fresh short positions can still be added in ICICI Lombard.
All right, Tata Consumer, Ultratech Cement, as well as ICICI Lombard. These are some of the stock recommendations coming in from Sacchitanand. With that, Sacchitanand, thanks a lot for taking our time and joining in and sharing your thoughts, and of course also addressing all of your queries so patiently.
Thank you.
Well, with that, we've come to the end of this edition of Morning Trade. So from me and the entire team, thanks a lot for tuning in.